Our next guest is an experienced entrepreneur with 2 exits. Involved in blockchain startups since 2013, she was co-founder and CSO of crypto and blockchain ecosystem Shenzhou in China. She now consults in the space and is currently building Findy Ventures to invest into killer upcoming blockchain, crypto, Web3, and fintech startups. She is our first multi-day guest for BlockDown 2020. Her talk is titled VC Investing in a Crisis. Web3, blockchain, and crypto present the perfect opportunities. Please welcome back Zia Word. Welcome back, Zia.
Hi, Chris. Thank you so much for having me. So I want to start off with slide 1, please. We'll start off with a common entrepreneurial green shoots meme that's going around at this current time. And you probably would have seen this floating around on LinkedIn and various other platforms. And it's about successful companies that were built in the last crisis. And if you look back at the last crisis, you can see there are several memes that were released at that time, looking back at the crisis before that, and so on. So obviously, this indicates there's a lot of opportunity, right? It is possible for multi-billion-dollar companies to be built during a crisis. Slide 2. But of course, we know of another very important development that happened in the midst of the last recession that a lot of these green shoot positive memes miss. Our most common gateway drug, Bitcoin. So we saw why in the last crisis that a new monetary system, something that needed to happen. A system in theory that not controlled by larger entities. And we'll circle back a bit on that particular point in a little bit. Now, the third thing you may have seen circulating, if you can move to slide 3 for me, is this particular chart. And this particular chart shows what happens to the share market, what happens to the markets directly after a crisis. So you can see it's really obvious right here. You have the bear market, and right after that, you have a very, very bullish market. You see those huge sweeping curves that go right up. But what we see with these particular kind of top line memes and things that go around is they're only scraping the surface. They're only really telling one side of the story, and particularly one level of the story. So I wanted to dig a little bit more into that, and I want to talk a bit about the current crisis and the challenges that we're going through, particularly in blockchain and crypto and startups and tech in general, and about what VCs are doing at the moment in the space for startups, and on opportunities, so on the white space, and so how we can collide those opportunities for blockchain, crypto, and Web3 within this crisis and beyond this crisis. So you can take down the slides now. So what are some of the top line challenges that affect us? So what we're largely seeing in this crisis is a major rapid change hitting complex systems that cannot adapt quickly, right? So complexity is a trap at times like this, because when I talk about complexity here, I mean systems that are rigid and brittle. At a time when, like this, when adaptability and resilience are paramount, that's when we start to see these systems fall down. And we're seeing that right across a number of industries. You know, a perfect example would be something like the hospitality industry, right? It's very rigid, it's very brittle, it's virtually shut down. So when we think about the blockchain, we could look at it as rigid. You know, one of company same ways that systems I'm talking about here are. what we see in a crisis like this is real use cases for distributed systems that don't rely on one rigid and brittle system. And so we can see that distributed systems really start to gain traction in a particular crisis like this. So let's look at the huge dominance, another issue that we come across. So let's look at the huge dominance of platforms. And of course, this is a problem that many of us in tech have been aware of and in some parts trying to solve for a while now. But what I think that this crisis has really put an emphasis on is how much reliance is placed upon those larger platforms. And by platforms, I'm talking about things like Amazon, monopolies like Amazon and Google, and of course, social networks. So, of course, Amazon's seen a huge increase in sales and a huge increase in need for deliveries. And social networks have become paramount. They've become, our connection to the world in a crisis such as this. So the consequence of that is that they have even more leverage than they did before, which was large enough as it was. So they have even more commission over our experiences as humans. And that means our reliance upon them is ever more present and ubiquitous at a time like this. And so what we want to understand is, what does that mean in terms of value? And when I talk about value here, I'm talking about data, I'm talking about ownership. And that ownership, directly relates to data, could relate to digital currency, could relate to identity. So now to get away from those platforms, we need to start allowing the distribution of that value to a new series of networks. And of course, with distributed networks, that's something that we can fully realize. So we need to start to create that new economy so that our reliance upon these particular platforms isn't as ubiquitous as it is, because ultimately that value doesn't lie with us currently. It doesn't lie in our hands. And what we as a community and as an industry have always wanted is to have that value in our possession. So there's huge opportunities for distributed systems in this particular economy when you look at the problems that it throws up and our reliance on what's currently out there. So what we're starting to see is a new economy, but a new value. So when we talk about the new economy and we talk about the COVID economy and the post-COVID economy, we start to think about Web3. There's a large amount of white space that we can fill, and I touched on it before with distributed systems, but where the two collide and where we're solving problems, where we're storing and exchanging what I see as that new value. And what we have at the moment is the perfect opportunity for that paradigm shift that has slowly been happening towards Web3 to quite quickly accelerate at this point in time. And you may have heard CZ talking yesterday about closing the loop on cryptocurrencies and how they are working alongside quite a few others, allowing hardcore crypto believers to never have to touch fiat, right? And this is where it starts to get really exciting for us, because this is where we will start to see cryptocurrencies come into their own. We start to come closer to reaching those early promises of banking the unbanked, of building an entirely new monetary system that isn't as volatile as one country's economy. And I touched on this very early on when I spoke about, the last recession bringing about blockchain and the need for a new monetary system. And one of the things I think we haven't quite realized yet is that independence away from the rest of the markets. It's quite obviously affected by the rest of the markets, and that's just the nature of economy. But we still do have the opportunity to create that new economy that we haven't fully realized that yet. And so when we hear about things like closing the loop, that's when we become, really excited about the opportunities that we can create. And so we need to remember as well that we are still early. A lot of us have been working in this industry for a number of years, so it doesn't feel like it's early. But when you look at the larger market, you look at people out in the wild world, you talk to them about what you do, a lot of them don't understand it still, right? And that's how I approach speaking to the larger audiences. We have a problem with talking in jargon and with being quite insular in our industry, and I'll talk about that a little bit later on. But we are still early. Technologies take around 10 years in general to mature, and we've only really just tipped over past that point. And so after we saw the kind of excitement where it came up towards the end of the maturation of the technology, was when we started to see all the hype. Post that, now we start to see the use cases, and we start to see the real value of that particular technology. And here I'm talking blockchain, of course, and distributed ledgers. So we as an industry have built the fundamentals of great use cases for the technologies. With DeFi, we're getting closer. Again, we heard CZ talk about that closing the loop, and they're not the only ones doing it. A lot of other companies are also talking about closing that loop, allowing you to use your cryptocurrency as you would fiat without having to touch fiat. We're getting closer, and obviously, mass adoption is a barrier to that, and that's again comes back to our branding issue as an industry. And so that's where I think people who are expert in that need to start working a lot closer with the people who are in, building the technologies and the technology teams to really take that to a larger audience. But we're seeing we need to push forward with the new value, and we need to push forward with how we create business models that will service and allow us to realize that value. So what we'll start to see is more proof of algorithms, such as Arweave's proof of access algorithm. That allows the shift of pay per use and pay per outcome that I believe we'll start to see in the post-COVID economy. Because this particular economy, we look at models like subscriptions, we look at models like paying up front, but here now we need more pay per use and pay per outcome, which blockchain has a really strong case for. And I think this is another area in which we've got a real opportunity. And quite quickly, I think we're going to start to see more seamless integration of blockchain and DLTs with other technologies such as AI. And we are already seeing this, but on a larger scale and a lot quicker adoption than we are currently. And I think that the current environment really places us in that position where if we work hard and we work smart, we can push those technologies further a lot quicker. So this will allow those technologies to work together to allow protocols to be more autonomous and and really govern themselves a lot more efficiently. So what I would really like to see in the industry is a shift for us to stop presenting ourselves as blockchain first or distributed first. And not because that's a dirty word or not, and not because it shouldn't be talked about, but what I would like to see is people outside of our industry really
We've lost Zia, and we're going to try to get her back online. Right now, we're just going to go to the illustration that's been inspired by the artist and by Zia's speech so far. I think we've got you back, Zia. Sorry, we lost you for a second.
Yeah, sorry about that.
All right, jump back into it. Yes, we were hanging on the side of the cliff there. All right.
So I was talking about the what I'd like to see the shift in the industry is to stop presenting themselves as blockchain first and distributed first. And like I said, not because that's a dirty word or a dirty way to present themselves, but because I'd like to see that mass adoption start happening. And I think this economy really has the opportunity to allow us to do that. And what it boils down to is very simple, is that if we can present what is cheaper, what is faster, what is more efficient, and allow that to fit seamlessly into people's everyday have-to-haves, then that's when we start to win. So that brings me a little bit into what's happening with VCs deploying capital to startups right now. So you will have heard that there are extended timeframes and clear pullback, tightened budgets for non-essential items. And as companies batten down the hatches, we'll see the balance between critical functions and innovations will be felt noticeably. However, beyond survival, we have to keep the next 2, 3, 10 years in mind. So even now, the scalability that new technologies and infrastructures have provided is shining in market. So, and that's because it's often catering to a high throughput audience, right? So as a general rule, funds in this current market are larger funds in this current market with larger portfolios are more likely to be on lockdown for new investments. So that means that they may well put more money into investments they currently have, more money into portfolio companies they already have invested in. And funds with smaller portfolios are more likely to be looking at new deals. And that's because they're probably more speculative. So as we go out to market, we talk about being the first money in. So we very much look for companies that we can take on that journey to further fund it within our network. So we are highly speculative, but we look at those white spaces. We look at where we can fill those white spaces, and particularly in this market, although we are being sensible, there is a lot of opportunity. So another thing to think about is valuations. Now, you cannot expect to have the same kind of valuation that you would have expected a few years ago. Valuations are already down 30 to 50%, and we saw that. Quite quickly happening actually before this crisis hit. We saw that already with well overvalued companies who blitz scaled themselves out of profit. And the data is clear that average investment returns increase in the years after a downturn. So there are still investors looking for those deals. Access to capital can be tighter, but we'll see in this case unprecedented amounts of capital sitting undeployed. And so there's opportunities for startups in our space to access that capital. And competition for talent is typically reduced. Market expenses are lower, and customer acquisition costs are typically reduced as well. So there's lots of opportunities in those grey spaces, in the white spaces, where we can really capture that market. And focus could be sharper with fewer market distractions, as well as pressure that comes from having somewhat more limited margins within which to operate. We're also seeing some key acquisitions in our market, which is a positive sign. Obviously, we had Binance's recent acquisition of CoinMarketCap and shapeshifts of Portis being prime examples. And by nature, Web3 lends itself to last mile banking, distribution, data. Which all become absolutely key in a market like this.
Hold on, don't put me in yet. We seem to have lost Zia again. Hopefully we can get her back. I don't know how close she was to getting it done. Listen, I hopefully we can get her back. If you guys can remember to put in your questions, because I have a lot of questions for Zia, so hopefully we can get her back on board as soon as possible. What we will do is we'll quickly take a look at the inspired artwork from Zia and her presentation thus far. The artist will continue to do this throughout BlockDown 2020. We have a bunch of different artists that are being inspired by different speakers and their chats. So you can see that right here. And I just got word from our super team that Zia is back. We're having a bit of technical difficulties, but listen, it's not going to stop us. It's part of this new world of virtual conferences. So continue, and I'm really excited to actually ask a whole bunch of questions when you're done. We have some questions from the audience, but I have a lot specifically for you and your chat that's relevant. So continue, and we'll get to the questions afterwards if you can stick around a bit longer.
Great, no problem. So I'll just cycle back. I don't know where we lost each other, but we're seeing early stage valuations that are already down. But before that was already before the crisis. That was already happening when with well overvalued companies who blitzscaled themselves out of profit. But the data is clear that average investment returns increase in the years after a downturn. That access to capital can be tighter, but we'll also see a lot of unprecedented, in fact, amounts of capital that will be sitting undeployed. Competition for talent is typically reduced, marketing expenses are lower, and customer acquisition costs typically are also reduced. So focus can be a lot sharper with fewer market distractions. So we've also seen some key acquisitions in our market, which is a positive sign. Binance's recent acquisition of CoinMarketCap, and then just announced yesterday, I believe, Shapeshift acquired Portis to allow greater custodial access, I think. So, and by nature, Web3 blockchain lends itself to a lot of the technologies that are needed in this particular crisis. So last mile. Last mile banking, last mile distribution, last mile data, which all become absolutely key in markets like this. And so as a startup, what should you be doing right now? Are you raising? If you're raising, what should you be doing? Well, particularly look at where that grey space is and where the white space is. So by grey space, I mean what you're already doing and where that can meet demand. And then by white space, I mean opportunities that you may not already have taken. So that, when we talk about that in startups, that's a pivot. But potentially you can look at different ways you can service new markets or service your own markets in a new way. And then the other thing that I would do as a startup in this current environment is to communicate. So by communicate, I mean communicate with everybody. So reach out to investors, reach out to your community, reach out to your team and to your customers, and talk to them about what you're doing and talk to them about where you're at. Because the more that we communicate in this kind of crisis, the more that we can actually come to realizations where those opportunities are and how we can help each other with those particular opportunities. So I think it's less about particularly what needs to be developed. A lot has already been developed, and of course that is still happening. But I think the industry, and I mentioned this a little bit yesterday on my panel, as a whole has a bit of a branding problem, a bit of a positioning problem. And so I think we need to, as a community, support each other in that. What I want to take a little bit of a step back before finishing up. And some people may not like me for saying this, but I want to talk a little bit about the problems as an industry that we have with a little bit with an elitism, with tribalism, and with a bit of an echo chamber of jargon that can hold us back from reaching the potential we do have as an industry. And don't get me wrong, it really is, it's hugely important for us to have leaders and custodians of the technologies that we're working with. But I do think that we can get bogged down, and particularly we can get bogged down in right now. I could get bogged down in the granular of the economics or in the breaking down of technologies. But ultimately, what we need to do is, and especially at a time like this, is galvanize and really guide a wider audience to new ways of working that will make us more resilient, more open, more transparent, and more efficient as a society. And I believe that our industry really has an opportunity to do that. So thank you very much for listening, and I'm happy to take questions. Sorry about the technical difficulties.
No, it's totally fine. Thank you very much for your speech. I think that it is so incredibly important at this time what you are speaking about. And I'll tell you why. There are a lot of crypto and blockchain projects that obviously raised some funds, some way more than they ever needed and way more than others, but a lot that raised a reasonable amount and have had the last couple of years to put together something to start gathering traction. So I think it's incredibly important at this point because a lot of people don't understand, even $1 million over a 2-year period of having a team, a small team build something, will go away pretty darn quick. So now is the time for them. And you just, letting them know that there is hope and there is investments out there and there are people that are still looking, because I know there are quite a few projects that are a little bit desperate going, listen, we did something. Hey guys, we're here. We did it. We made it happen. And I think they're getting very scared, and there's no need to fear. There's enough people in the industry, and it's just like getting investment for any startup. You're going to have to dig it out, and you're still going to have to look around and talk to hundreds and hundreds of people. So yeah, it's very, very exciting because this kind of traction and development can happen at any time when you're developing a startup. So I wanted to talk just really quickly about Findy Ventures and where you're at. I missed some of your presentation, so you might have talked about it, but are you guys ready to start to launch some capital into some projects right now or soon?
So at the moment, we are still in the process of raising our fund. We are hoping to close that within a couple of months. But what we offer at the moment is consulting. And so our model's a little bit different. So as I spoke a little bit about being first money in, that's quite important to us because we work with startups on their gaps in between, being early stage and being a later stage company. There is, having been an entrepreneur myself several times over, I know that the early team wears 50 million different hats at one time. And of course, things get missed when that happens. So we like to work with our companies quite early on to really help them drive that from the pre-seed and the seed investment onto a Series A. So we actually spend quite a bit of time with our companies, and we don't necessarily look at as many companies as a larger fund may look at. And we really try and use our network, not only corporate network, but our startup network to really leverage and help those companies. So what we're doing is moving from a consulting model into a consulting and funding model.
Awesome. Yeah, it's a very important step is that first funding, you know, the team that funds a project, the first one's in. A lot of time they're in it for the money and the gains, but if you pick the right investors, the right venture, the right people, they can expedite the growth and really help. So that's really important that to all of the people out there raising, if you're raising capital, just make sure, listen, it's not about just trying to get money. It's about making sure that the people that are funding you are the right people for you and going to be there to support you and grow that out. Zia, absolutely incredible. It's a really fun space. It's so important for all of these blockchain startups and crypto startups and fintech startups and everybody else out there to hear speeches like yours. I think they're incredibly important. And I don't think there's enough of these presentations and talks out there right now, because I am part of a crypto project that raised a bit of money a couple of years ago. And of course, we go through this whole entire thing too, you know, we definitely need more money to scale. And, you know, yeah, it's so important. And just hearing these kind of words then can take off a little bit of the stress that already overwhelms the entrepreneurs of
Absolutely.
These startups. Cool. Thank you.
Absolutely.
Thank you very much for being with us. Fantastic presentation. All of the best and good luck with everything. Thank you, Zia. All right, guys, moving on. We're going to have another short break. I need you guys to get in some questions for our next up and coming guests in our panels. There's amazing individuals coming up. Today is action-packed throughout the whole entire day. After party, virtual after parties are going to be starting to happen on the East Coast of the world, but you can join them from anywhere in the world because this is the virtual reality. So yeah, guys, we'll take a short break and we'll be right back in a moment.